Welcome to the Trading Lounge, and US dollar has moved down and bonds have moved with the dollar, and stock is moving to the upside here. So the wave count that we've held here seems to be unfolding in the right way. So the S&P 500 here on the 2-hour chart. So in a bit of a nutshell, just starting from this wave 4 here, we're looking for 1, 2, 3, 4, 5 to here for wave 1, and a bit of time here for the ABC for wave 2, and now we're seeing the wave 3 push up, which will push up a bit higher than this here. But in that move up there'll be 5 waves, and it appears that we've got wave 1, wave 2, and wave 3 is moving up through here. Obviously there'll be some resistance through this little area through here, and we can expect a corrective pattern across the 1530 there for the day traders. If we have a closer look at that there, so we can see that on this 20-minute chart here. So the idea is to scale in through this is micro group 1 here, 1, 2 and 3, but yes, up for 1 and back for 2. Then the third wave is the 1, 2, 3, 4 and 5, maybe 4th here, and the 5th coming in through to here. So you expect the normal trading levels classic pattern across the top through here, and that would leave you with support on here, and then another push up. The same with the US 30, the Dow here as such as well. Yeah, look, well, this is the sort of pattern through here. So we're looking for a little 5-wave structure. This is a daily chart, of course. The just the sort of the move up from here to create the wave 3 here, then a wave 4 to pull back to the wave 4 of 1 lesser degree, and then another move up through here as well. So, you know, a fair bit of sort of zigzagging through here, but the main point, and it may not pull back to these points as well, it may end up sitting on the 14,000 or even a little bit higher, but we'll look at that when it comes. But it's just nice to look at the textbook kind of approach through here as well. But on a smaller note here, the same as the S&P 500, the Dow here. I know this is a little bit sort of complicated through here, it even confuses me, but what we're trying to look for here is this wave 2 low here, and then the wave 1, wave 2, wave 3, 4 and 5 and so forth. The target up here, of course, would be the 14,100, the next largest number, and for levels in between the 100 here, of course, the group 1, which would be the 10, 20 and 30, followed by the midpoint, the 50, and then group 2, the 65, 72 and the 80. And the idea is to understand support and resistance, and trade from A to B, from one number to the next number of the same degree. And of course, money management within that as well. The European markets are pretty much on track as well. So we were looking at the FTSE here, and we had our little wave count through here. We were looking at this as an A and a B and a C here for wave 4. We thought this may have been a B wave here as well, but as long as it stayed above the 63 there and didn't really overlap wave 1 here, it could have been this one or this one. I thought it was this, more likely this one. That everything would be pretty sweet. So look, this will just continue to push up. One of the main points here is that the 65 here is a medium level, and you know it's going to have a fair impact there as well. So just be mindful of that. But in terms of trading, it's quite close. It's in from when you're working with indices, you always work to the 100 points, and then you look at the sub-levels between the 100 points, and moving, you know, the Dow just moves, it moves from one, you know, moves every 100 points, so you should be trading it to every 100 points to the best you can. So in this particular case here, you'd need to wait for 6,400 to have its correction, because markets are trends and corrections of various degrees, but you need that corrective pattern there as support, and that's where the next trend is engineered from, is from the correction. You always get the opposite of what you're looking at. So the FTSE's fine, the DAX is pushed up higher as well. So we're looking from this high point here, we're looking at a possible A, B and C wave here. I thought the C wave had if the S&P 500 fell out of bed and as the dollar moved higher, then we would have seen this come down as a larger C wave in terms of an impulse wave down for wave 1, back for wave 2, and then down for wave 3 as such. But it doesn't seem to be the case. There's still the possibility that this move down through here being the A wave, this being the B wave, but the B wave here can still be over here as well in terms of a larger A, B, and a C here. Pretty unlikely, but just thought I need to throw that in there because 78, the number 8 is always a profit-taking number. 1 is the strongest number, followed by 5 and followed by 8. And that's why you see, wherever you see an 8, you'll see profit-taking there, and you need to be doing profit-taking as well. So in this little structure moving up here, we've basically got up for 1 and back for 2, nice strong third wave. So you know there's going to be a third and fourth in here, and then a little fifth up here, then the A, B, and C across here. This number here is really important here because it's when you get 72 is always important, but when you get 772 or 272 together, it just seems to carry a little bit more weight to 7, 2, and 9, and just adds up to the 144 number where Gann and Elliott, Gann and Fibonacci meet, so to speak. So that's that. That should continue to push up. So that's positive there. Yeah. So the Australian market, I might just look. The 5,100 is the next target there, but I just wanted to point something out on the daily chart here as well. The 61.8 retracement level from down here is this is the bear market here as such. So we're coming in around the 5,400 here. So I mean, don't just take that with a pinch of salt. Essentially, we'll look at the wave structure as it moves up there a bit closer. But what I did want to point out is that I remembered over here when the market came through here, it came through in the overshoot pattern, and as mentioned before, that there's only two types of patterns that can really happen at a level, and one is the classic pattern and one's the overshoot pattern. So in this case here, we can see this is pretty much what's happening now at the moment, really, and that came up to 5,400 as well, for no particular reason, but as such. But we can see the little wave count here, the 1, the 2, all the way up for the 3rd, the 4th, and the 5th. So that's sort of what we'll be looking at the moment. I'm not sure how far this will run, but in this case now. But if it happened over here, there's, each market has its own unique makeup. It's normally each market has about a good half a dozen patterns, and those patterns can be really small or really large, or they can be skewed around certain large numbers and so forth. But those half a dozen patterns make up the personality of that stock, and that's why each market travels a bit differently. They're all the same, but all different, like us human beings. Look, we may get something like that occurring over here as well. So I'm just being mindful of that. And if we find support on 5,100, well, then of course we'll be looking at 5,200. It's best to trade what we see and just use support and resistance and money management, and looking, of course, at all the other markets. So what we do need to see in the US markets as such is just having a look here for the bonds, actually. So great, so that's actually fallen out of bed here. So this is the US bonds here on the 4-hour chart, and we've been tracking this all the way through here, and we're looking at well, first of all, we thought this 3-wave swing here might just do it as such, but it was only the A wave. Then we had the B wave in 3 waves, and then we're looking for the C wave up through here. And look, this still may be the C wave. This may be some sort of 1, 2, 3, A, B, C for the 4th here, and one more push for the 5th here up to the 144. But I was sort of viewing this. I know that's corrective in here, but it could be the A, the B, and the C here. But if it moves, another sort of sharp move down through here would pretty much sort of nail that situation there. So that means that if the bonds are going to break into new lows here, then the dollar will follow it, and stock will push higher, and that's what we've kind of been waiting for. So we are at the gates of the possible next trend, so to speak, and I think that's pretty exciting. But I just can't confirm that. But a nice sharp move down below through here would do that, or we will see that on the US dollar, which we'll have a look at in a moment. But let's have a look at the commodities, because the base metals are still moving lower, the copper and the nickel, and they're moving in line with, not so much in line, but the gold is obviously precious metals. Silver and gold have been in a bear market for a while, and the base metals are just starting to turn with them now as well, which may last into March. And that brings up another little topic as well, the possible top that we'll be looking for in here in terms of astrology, I guess, is the 21st of March. I mean, all these equinox dates and so forth are all, they're not that sort of way out and moony as well, because the financial system, the accounting system, is also based off them as well, and that's how it sort of fits in there. But the March turning point, the 21st, can be a good point. I remember the start of the bull market down here was on the 21st or 23rd of March as well, and that's how we nabbed that one. So that's a possible sort of timing date for this top here. Anyway, let's have a look at the metals. Just before I start talking about copper here, I think it's probably a good idea to just mention that the Nasdaq is trading at 2,775, so it's above the 772. So you could go long there and put the stops under the 770 at 69 or 67. Never put stops on full numbers, because, well, that's where the orders are sitting. Everybody's thinking of those, so you just always put them below the closest largest number. Back into the metals here. This is just the daily chart. It's a futures contract, so the March contract, so it doesn't have it all here. But yesterday we pointed out the big triangle pattern that in the copper market, in terms of the LME copper, so this is obviously much the same as well. We can bring this into line in terms of a triangle, which is 5 waves of an A, B, C, D, and E here. The warehouse figures for copper seem quite full, the same as nickel as well. The aluminium and zinc seem a bit low, so they might be a bit more steady. But there is a possibility now that this can, if this is the case, then this will move down to make new lows below the triangle pattern, down into this sort of area here. So that's a real possibility. And so we've got a little 5-wave structure down to here, so we could call that wave 1 and wave 2 here, and the little third wave coming down through here now. So this don't worry about this line here. This line's just a timing line, sort of geometry stuff. But the 1, the 2, the 3, the 4, and the 5 down for wave 1. If we get 5 waves here, then we'll get a 3-wave counter trend. And then if we get 5 here, that means we'll get another 5 over here. So that's what we'll be looking at from that point there. So, the gold, when you think about it, gold had been moving down quite rapidly for some time, and then this is unfolding now. And if this is the case, then at some point in time, then this is going to slow the materials sector down. So be mindful of that. When we look at BHP here, this is US BHP, we can see that the metals are down, but US BHP is up through here. Okay, so it's still finishing its run to the upside. So that's fine, but at some point those metals will pull over to that side. Now, BHP obviously has oil as well, and we are looking for oil to push higher as well. But we'll get that blend working there. But the other materials sector constituents will eventually feel the drag of this copper and nickel coming to the downside, because the other metals will be with it as well. Okay, so we'll just keep an eye on the development of this move down through here. The gold market, such here, this is still moving down through here. So we're looking at this little wave 4 here. Now, this wave 4 here, just got to point out that wave 4s are normally sideways and complex. So this wave 4 may be over here as well. And what that would mean is that I mean, we know this is corrective, and we know that eventually we'll make new lows because this wave here is in 3 waves. So we know that this move is corrective. It's a continuation pattern, and it'll eventually move down. What we're unsure of this stage is that this A, B, C here may be just the A wave, and then this here, 5 waves for the A wave, a B wave, and a C wave here. That could be a larger B wave. So basically an A and a B and a C wave back up to here, and then folding down through there. So that's one possibility there. So we just got to be mindful of that. The other scenario for this is that this is the impulse wave down for wave 1, back for wave 2, and this is the 3rd wave unfolding through here, and then there'll be a 4th wave locking back up under the 1600 here, and then the 5th wave down. So basically 1, 2, 3, 4, and 5 down for the 5th wave of the 3rd wave here, and then we'll get a wave 4 back, and the wave 4 back can pull back to the wave 4 of 1 lesser degree up through here. So we just need to be a bit mindful of that as well. But the trend is certainly down. Just by looking at this here, I can sort of see that we're down for 1 here, back for 2, down for 1, back for 2, down for 1, back for 2, 3rd. So this is probably just a little 4th wave bounce here, so that probably won't go very far, and that will move further to the downside. So just got to be careful about once this market here locks under the 1600 here as a little 4th wave, then we can bring the stops further down and put the stops at the 1623 mark here. But while that's on support there, we may get that bounce there, so you need to ride that out. So just be mindful of that. Just wait for that to be stuck under there. The silver's much the same as well. While we're up here, we'll do this. We've got wave 1 down to here, wave 2 to here, and then obviously this is all the 3rd wave here, and this 3rd wave's unfolding in a whole series of wave structures there. So down for 1, back for 2, and then this is the 3rd wave down to this point here, and it may even be this point here. I need to recheck that because this seems to be one particular structure here, but the main point is that this this should move down a bit closer to the 29 here, and then there'll be a bounce back up, and then another move to the downside as well. So we can bring the stops down to above here, so just keep them above the wave 4 here for the time being, or they should even be able to go at just above the 72 here at 73 or 77 through here. But continue to hold short. If you've added to that, that's added to the failed retest here, that's fine. They'll continue to move lower, and in fact, in looking at this situation here, they down for 1, back for 2. So we're looking for down for 3 here. So we'll be looking down at the 28 here. We just got to be careful of how large the bounce is off the 29 here if it retests the wave 4 of 1 lesser degree here. So we'll have a closer look at that, but just bear that in mind. But the trend is still down, and as we got a series of ones here and 2s here, that's going to be a bit of a mirror image of the 3s and 4s that occur down through here. So just bear that in mind. The oil market, this is Brent here. I know we don't look at Brent that much, but I just like to do that. So look, in a bit of a nutshell here, this is up for wave 1, back for wave 2. up for wave 3, back for wave 4, and it still may come back into the wave 4 of 1 lesser degree. That's why I've just left it there. But once that's finished there, we'll see a move to the upside there, in line with stock. So when we're looking at the W Texas here, okay, yeah, so so what we were looking for here, we're looking for the A wave, the B wave, as you know, and the C wave down here. So obviously there's been some error made in here in this wave count, with this pushing up through here, because this wave 4 here can't push into the territory of wave 1 here. So there's obviously another way to look at this particular pattern here, and at a guess that would be down here for 5 waves down for the A wave, the B wave here, the C wave here, as such. So that would simply move into this situation here. That C wave would move here, and that wave 4 would move here, and this would be up for 1 here, and an A and a B and a C for wave 2 here, and then this would be up for 1 and back for 2, and a third wave moving up in line with stock. So normally what I would do here is the 96 and all these whole numbers are important, but on a subtle level here, the 96.50 as support would have been the catalyst for long positions to the upside. Now that that's moved up to the upside here, you can see that it's reached 97. So there's not a lot you can do here at the moment. It's best to wait for this to unfold, and what I mean by that is that it's had the arrival, it needs the reaction, which it's doing now, and then it'll have its first high above the level, and then it'll have some type of correction across the 97. After the correction, then look for support, and then scale in through group 1. So 97, 10, 20, and 30. If support is found on top of 30, you can buy again on top of that support. Then it'll get you to the midpoint. You don't want to buy there. You can buy at the midpoint, but only on support, and then this high should be taken out from that point there. So even though that's pushed up there, we still need to see support on the 97 before you can trade there. But obviously this is going to move in line with the S&P 500. All right, let's have a look at FX and the US dollar. Okay, so the US dollar and the US bonds will be moving together, and as you've seen before, that there's a reasonable bias that the bonds can move even lower, but we just need to get that sort of confirmation, and that's a little bit the same here as well with the US dollar. We know that we're looking for a 5-wave structure up through here. We've got wave 4 and wave 5 up here. It's not very sort of clean through here. I might have to change this to top of wave 3 here, and wave 4 and wave 5 into this area here. So this move back down through here can just be if this extends up, it can just be 5 waves up, 3 waves back, and then further up through there. Now and that's fine, and this move through here would represent that ABC correction from that. So we do need to see a really nice sort of clean break to the downside here to confirm this being a top through here, and it's just not there just yet. So when we look at it on the smaller chart through here, it's got the makings of it in terms of, well, in a correction, the A wave is normally sharper than the C wave here, but this here is expanding through here. These trends here, the corrections here are getting larger as this moves down through here. So it may have the personality of a small third wave coming through in terms of down for 1, an A and a B and a C for wave 2, and then down for 1 and back for 2 and down for 3. So it's likely to go down further anyway, but I still don't have that impulse wave to the downside. We don't have that 5-wave structure to the downside, because if we do get 5 waves down through here, then we'll get 3 back up and then another 5 down. So we need to see that 5 down first. So this can still be a corrective pattern through here at the moment. So need to sort of look at that after the next session to sort of see where we are through here. But either way, there will still be a consolidation around here and a spike down through here. So we'll keep an eye on the bonds and the dollar here to confirm that over the next session, which obviously reflects back into the euro as well. So when we're looking at the euro here, we've in the morning report we've always sort of had this count here in terms of the A, the B, and the C for the A wave, the B wave, and the C wave coming through here and sitting on this this nice trend line through here as things. So we are seeing this bounce here. The 134 here is a Fibonacci number, the 34. So it's also pretty much where the the balance line is through this area through here. So we would really need to see that as support there, because once again this move up through this move up through here can be corrective as well in terms of an ABC. It hasn't really developed into an impulse wave yet. So if we have a closer look at that in here, we can see that this is the move off the low here that we've held here. But this can be up for one and back for two, and a third wave moving up through here in line with the stock moving higher as well, the S&P 500 and so forth. But the problem is that it's still in still in three waves through here. So in terms of trading long, if you can get it off the midpoint here, the 50, that's fine. The next place to enter this is at the 134, but this move up through here needs to be corrected as well. So it may react from here. Because it's consolidating here, it's likely to push up into 134.10 sort of area, if not higher, and then have an A and a B and a C across here, and then support and then move up. The correction across here will probably be quite small, because if it is going to move up high here, this accumulation process here, Richard Wyckoff's work here, the accumulation equaling the distribution here would send this market higher. So don't expect it to spend too much time here. The idea would be to allow the first high to come in, at least one retest back to the 134, and then build the trade on the 10, the 20, and the 30. If support is found on the 30, then it separates itself psychologically from the 34, and then will move higher from that point. Well, at least move to the 50 there. So I suggest taking profit there and waiting for support to come back in. But support coming back in would certainly be the next step up. So all that's pretty exciting, but at the same time you have to remember that we've got three waves here, and this can be the C wave here, which will be 5 waves in here if you want to pull that apart. And once it gets to here, it can fail from here after this 5-wave structure, and then move down from that point there. So just bear that in mind. But at this stage, we need to trade what we see, and what we're waiting for next is a setup on the 134 to trade in from that point there. If you're going to trade long from here, then you need to keep the stop under group 2 here, or at least under the 61.8 retracement level, say from the 134 back to here. So you want to sort of even under the midpoint there, really, but that's a long way away. So depending on how you trade, because the first thing you do when you trade or creating a trading plan is choose, people say time frames, but I prefer to work with a degree of structure. So you work with choose a degree of structure, and then set all your rules around that degree of structure, and also your money management around that. But yeah, support and resistance is the name of the game, getting from A to B. All right, the Australian dollar is pretty much on track here in terms of, we've been looking at this structure on the 4-hour chart here, down for wave 1 here, and the correction for wave 2 here. So the A, the B, and the C here. This C wave here will be in 5 waves. That's what a C wave is. So it does appear that we've got wave 1 and wave 2 here. So this is all part of the 3rd wave here, which will have problem at the old high here in subgroup 2 area through here. Have like a wave 4 here and push up for wave 5. Now, normally the wave A and the wave C will have some sort of equality to that in terms of same size, basically. So the idea now is to track the 5 waves up through here. So So in looking at that, we'd have to call this up for 1 and back for 2 here. So this would all be part of the third wave up through here. Look, the bottom line is that there's going to be a correction here in group 2 here. So all you need to do is do nothing at the moment because it's not going anywhere. It will, you know, even if it pushes up through here, it's going to have some sort of correction across here as a wave 4. Once you can see support on 65, but we always work with 72, support on 72, then you can scale in there, add on here on the 80 and move up to the 104 there. So alrighty, well that's it really, and in a bit of a nutshell, the trend to the upside, we want to see the bonds and the US dollar break to the downside further, and that will help confirm the trend to the upside. The other way to do that is to see a robust support come in on the Dow Jones at the 14,000, that point there, and just be mindful for the Australian traders with the cash market, the SPY, CFD at 5,100 there, and of course you need to look at the main movers that create the index. So you know you've got BHP and CBA, the materials and the finance there can make up anywhere from 65 to 75% of the index there. So it's always good to be looking at BHP and CBA as a guideline to what the futures are doing as such. Yeah. Alrighty, well that's it. So yeah, it's Wednesday in the bullish cycle, a little bit like Tuesday in the sense that it can trade lower in the morning. It's a V-shaped day, and then it has a higher close at the end of the day. And Thursday is normally the bear day. But if it's going to be a bear day, we want to. If it's going to be a bullish bear day, that means that yes, the market does come down, but it comes down on lower volume, and lower volume in compared to the day before on the Wednesday. So yeah, on the daily bar, it's pretty easy to see. And if that's the case, if we do get a low Thursday and it's on lower volume, then we know that Friday and Monday are likely to push up to complete, well, the beginning of the next week's cycle. Alrighty, well that's it. So good morning and good luck. Enjoy the day ahead.